Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is 5:01 in the a.m. Eastern Standard Time. Our first swing trading today for 2021. So I'm going to keep my image off because I have bedhead. That's why I'm a little bit late. So bear with me with my tardiness. All right, what we want to talk about today is some news from last night that's very, very concerning, and that is the bizarre flip-flop of the NYSE to not delist, to no longer delist by edict, by executive order, the Chinese companies, the telecom giants, and we'll talk about that in a moment. We'll talk about U.S. economic data, which came out yesterday and is coming out today. We're also going to talk about emerging markets, and in particular, the VEEM, and we're going to be using TrendSpider for that. But before we get into it, I want to talk to you for a moment about our sponsor, TrendSpider. Don't settle for ordinary trading software. It's got scanning, charts, analysis, automation, backtesting, monitoring, alerts, and insights that you're not going to get anywhere else. Automate your grunt work, speed up your analysis, and improve your accuracy. I use it all the time. It's the next level in charting. You're using artificial intelligence. You're reducing costly analytical mistakes, find winning setups using their market scanner right here, strategy tester right here, and save time. This business is all about saving time right now so that you can focus on your accuracy. If you're new to trading, this is for you. Validate your theses by first reviewing your analysis on TrendSpider. Set up your automated trend lines. Are you right? How do you know if you're right? Use the functionality it has here by simply clicking a button. Automated trend lines at their finest. If you're experienced like me, use it as your spell check for technical analysis. Let's get to it. So, I saw this last night, and never have I seen such a thing, where the NYSE, which is a regulated institution, comes out and ignores, completely defies an executive order by the President of the United States. Now, I saw the President speak last night. Big fan, but at one point he even slipped. He said, good luck with Joe Biden and the North Koreans. So I think that, unfortunately, he is becoming more and more resigned to the fact that this election may, in fact, be over. I think it's sad for the nation. I have my own opinions about this, and the lack of transparency by the governors, by the states, by the lack of willingness of the Georgia governor, secretary of state, to, despite the calls for the legislature to have a second meeting, a decertification of the results, is frightening. So we already have China now pulling the potato Biden's strings, which is the only thing I can conclude here, for the NYSE to run out the clock and to ignore an executive order. And God bless them if President Trump does in fact defy all odds and remains in office. So good luck to the NYSE. Economic calendar. Hey, Sam, good morning. Costco, good morning. So yesterday we had the Marquette manufacturing PMI data come out. The reading came out better than the prior read. Any read above the 50 mark is a sign of expansion. Consumer spending, construction spending came in less than what was expected and much less than the prior read. We had Fed heads out yesterday. They did nothing. She's constantly speaking. 9:30 today, 6 p.m. last night. What else do we have? ISM Manufacturing Index, that comes out at 10 a.m. today. Again, a reading above 50 is a sign of expansion. And then tomorrow, it really gets heated up with the ADP numbers, factory orders, FOMC meetings. Man, look out below, above. We're either going to crash up or crash down, one of the two, very, very soon. And the reason why I say that is that the Dow Transports yesterday, I went over this last night with members on Market Wrap. I use the transports as our canary in the coal mine for the rest of the market. Now, I always like to say the market sends you signals, and when you get these filled hollow candlesticks at all-time highs, it doesn't end well. The last time you saw this candlestick similar was back here. It didn't end well. It didn't crash. Prior to that, back here. It didn't crash, but we corrected. We saw it again, and here we are, breaking down. Filled candlestick. And then yesterday, after breaking out on the 23rd or 24th, one of the two here, we smashed right through support. So we have a double top and now a confirmation breakdown. This is not wonderful. So buckle up. Volume was not that horrible. Rounding tops on Stokes look very, very poor. So watch for a fade on the Dow Transports. Now we did we did add to shorts of the IWM, which is the short of the Russell 2000 using the TZA. And we plan on adding more. Initially, we used it as a hedge. Let's talk about it. Initially, this is a monthly chart. Why does it say monthly, Bob? Okay, let's update this. Excuse me, folks. I had my chart mislabeled. And while I may have bedhead, I'm a nut about accurate labeling of my charts. Okay, so what we saw yesterday with the TZA was and this is a leveraged ETF putting you short of the small caps. We're not all in here. What we're waiting for is a continuation breakdown on the small caps. So, by no stretch of the imagination do I plan to be an aggressive shorter of this market yet. We're looking to go there. I'm hearing other talking heads on YouTube saying that you can't fight the Fed. BS, you can't fight the Fed. And I'll tell you why in a moment. We broke out on the 28th of December. Higher lows, continuation breakout higher yesterday. We broke out on volume. Volume has been fairly good. Stokes looking good. So the TZA looking wonderful. And when you take a look at the Russell 2000, very similar setup as to what we saw on the Dow Transports, in that we have a potential double top, and we may break down today. It's pretty much a guarantee that your fast line on the stochastics, which is a momentum indicator, will open up down below the 50 mark. And once you start getting that, rallies tend to fade. So beware, folks. The markets have a tendency, when they're going up, to take the elevator up. Excuse me, they take the escalator up. I always screw that up. And when they go down, they take the elevator down. So beware. Emerging markets. I want to talk to you about a second about this. Emerging markets are becoming a bit of a concern. Now we're going to segue over and into the pre-market activity. And what we're seeing set up here is a bit of a concern. This is the VEEM. This is the Emerging Markets VIX ETF. So when the VEM moves up higher, that means that the emerging market sector is coming under pressure. And this is a monthly chart. And you could see that what we're doing here, using the automated trend line feature, this is a monthly chart. We are beginning to put in higher lows. And the last thing you want to see is a breakout on price. This is going to get resolved fairly soon. We are in a very tight wedge formation, and we are long of the EDC, which is a leveraged ETF, putting you long of the emerging market sector. And it's becoming a bit tenuous to stay long for now anyway. Longer term, I like emerging markets. But you can see here, we're very extended on a daily time frame. We gapped up on the 30th, rallied into the third standard deviation Bollinger Band on the 31st. Yesterday, a big fat hollow candlestick, just like you saw back here. You got a bit of a pullback. Usually when you get these candlesticks at the top of a trading range, you pull back. So I may be looking to book profits on the EDC, and I'm concerned about a longer term breakdown in emerging markets. And when you take a look at a weekly chart, folks, we already broke out on the week. The week is not over yet, but we've already broken out on the EM. So we'll see whether or not we close there. Here's a daily chart. Okay, so if you're long of emerging markets, if you're overweight, you may want to make some of those profits real, and just watch the US dollar, because if the dollar rallies, that's going to put pressure on emerging markets. And with Russia coming out, remember, emerging markets are levered to commodities. Most commodities are priced in US dollars. If the dollar rallies, then that will not bode well for emerging markets. Here's the dollar yesterday. This is the dollar bull ETF. We flash an outside reversal bar. We may get a brief rally here. Longer term, I think the dollar's doomed. But in the short term, beware. Volatility is rearing its head. Let's take a look at the pre-market activities. Good morning, Daniel. What's your take on CGC? Was that canopy growth? If we have time, I'll go over it. I need to go over a bunch of other symbols first. GDXJ moving up here this morning. Here's the dollar. I don't know what's wrong with Thinkorswim today. Now, the dollar's been very, very wonky. A lot of volatility at the lows of a trading range. Usually you get a reversal when that happens. When you're at the highs of a trading range or at the lows of a trading range, you start seeing volatility. That means you have a tug of war between bulls and bears. There's no guarantee. We're firmly down with an 80 handle on the Dixie. And this is a 4-hour chart. These all be 4-hour charts. And you can see that after rallying yesterday, the dollar is now pulling back. So let's watch out for a breakout on the dollar. And that's going to be our cue to exit emerging markets for a while, if we do in fact break out. We're putting in higher lows on RSI, so beware here. A lot of volatility. If the Republicans lose those 2 Senate seats in Georgia, look out below for the dollar. Gold, of which we have a long exposure to, using the gold miners. A huge move up higher yesterday on gold, a yearly high, firmly above the 1912 mark. And it looks as though we're probably going to head up higher here. We're a bit extended on RSI, but if the dollar pulls back, you may see gold pull back a bit. But remember, we saw a bullish reversal bar, an outside reversal bar on the dollar yesterday, yet gold closed right near the highs, and it's not really pulling back. It's digesting gains. So we're very bullish on gold into the new year. We remain bullish. Silver, no less bullish. Huge move up yesterday. It's very cheap relative to gold. We are up this morning by a 0.5 percentage point. And it appears as though we may, in fact, head up higher. What we'll be watching for is a breakout out of this triangle formation. So silver looking good. Moving on to equities. Let's go to crude oil first. Then we'll go to equities. Crude is catching a bid. The energy sector held up fairly well yesterday. Watch the oil markets. If they go, that's a major concern. VIX, I'll tell you, the VIX had a big day yesterday, and while down a 0.5 percentage point, this is not a bad pullback. And if you're bullish, that's not good. This is a flag setup on a 4-hour time frame, and it's frankly no joke. We closed out the day yesterday overbought, pulling back. Looks like we could be setting up for a continuation move up higher on the VIX. Equities, Russell 2000, of which we added the shorts to yesterday. So, as I mentioned to members last night, we're moving from a I just lost my train of thought. For whatever reason, Daniel, YouTube blocked your comment. I just unblocked it. I guess because he typed in Republicans. Ridiculous. So we're moving from a trade rationale, a trade logic, from being net long of the market to now becoming net short the market. And we're still going to have a long bias in terms of precious metals. But in terms of equities, I've been warning for the past couple of weeks that, we had a big run. Let's come back to the Russell in a moment. Yeah, Daniel, it's hard to really talk about it on because you got to be careful what you say on YouTube nowadays. I mean, they censor you. They'll ban the channel. It's ridiculous. So much for free speech. So here is the S&P 500. And I drew this. This is what this represents, this brown setup here, is the measure of performance gain from the November 3rd elections. The stock market rallied a total of, let's call it 13%. And when I say the stock market, I mean the S&P 500. So let's talk about what happened there. The potato won, Biden won. So I don't think the markets really cared one way or the other who won the presidency, although they should. What mattered to them was two things. One, give us a stimulus package. Two, you got to have divided government. If you don't have divided government, that's not going to bode well for a market that is this expensive and now subject to one-party rule. Nobody that's in the financial sector, unless you're going to be in, well, you brought up CGC earlier, Daniel, so you may do well with that. But there are very, very few sectors that are going to outperform with one-party rule because absolute power corrupts absolutely. And if one thing is proven, anything apparent, is that even with divided government, the corruption that we've seen in this government of late is just basically shocking. So my thesis is that we have factored in stimulus. Remember back here, they were talking about $2 trillion stimulus package. What did they get? After a 13% rally, $900 billion. And today we wake up with the possibility of one-party rule. These candidates out of Georgia are not impressive. And the governor, Kemp, and the Secretary of State of Georgia, of which these two senators are running in, are blocking any efforts by the president to get a fair accounting of the election. So I don't know how you get the turnout, and that's why the president was in Atlanta, or Northwest Georgia. Well, I'm not sure where he was. But he was in Georgia last night giving a speech trying to get these two guys, or gal, elected to avoid this one-party rule. It's crazy. So beware here. This is a market priced for perfection. And if you're saying, Bob, The Federal Reserve has our back. They've had our back for a while. This is a weekly chart of the 10-year yield. Yields have gone nowhere but up over the past several months. And in fact, they broke out above the pivot point of this W formation. And we're probably going to get a one handle very, very soon. So my take is that the Federal Reserve panicked a couple of months ago and ran to Congress saying, you know what, there's not much more that we can do here. We can keep this bubble going, but you need to issue more money. You need to print more dollars and get it out into the system. And that's what they did. Only $900 billion versus $2 trillion that Nancy Pelosi could have had, but she wanted to win the election. I digress. Let's take some chart requests. All right, so I have a bunch to go to with limited time. I only have 3 minutes left here. We're going to go over VIAC, TDOC, FB, and we'll squeeze in CGC. And I'm going to cut it off there for Daniel. Let's get to it. VIAC. Viacom. All right, let's take off the automated trend lines and drawings. I want to get a fresh look. I haven't looked at this in a while, so I don't want to get influenced. All right, so we're going to begin with monthly charts here, then do a deep dive into the weekly, then daily charts. First, I like to do my manual. What happened here? Oh, okay, I did a manual. All right, take note here of this volume shelf on Viacom. I guess it's going to make me put the drawings up. So we have a lot of resistance at this level here at 37. Not a lot. I shouldn't say a lot. We have resistance at 37.86. We have plowed through multiple resistance levels. So the chart is setting up nicely on a monthly time frame. Weekly chart. Take the drawings off, use the automated trend lines, nothing there. Back to the drawings. We broke out above resistance at 36.58. Now we're pulling back this week, retesting the breakout point. I think it looks okay. I wouldn't be an aggressive buyer here, especially with this market on a bit of shaky ground. So what I would do is I wouldn't necessarily wait for a breakout above 30, let's call it $38 per share. I would wait for 38.50, and that would mark a breakout above this. I have an old alert set up here. Remove alert. Okay, there we go. This upper band of resistance looks like I identified that as being a good breakout point in the past. So VIAC, what we'll look to do here is look for a breakout on a weekly time frame. We'll keep this active for a few days. Let's get rid of this, clean this up a little bit. Some old alerts. Daily chart. Not a good day yesterday. Outside reversal bar, but we're holding these volume shoves For now, anyway. I don't see a major rush to get long here. I would wait to see. Let's bring up the Stokes. I actually have the Stokes up here. We're rolling over. Still healthy though. If you're gonna get long, no matter what I say, nibble, stay small, wait for the breakout above resistance. That's VIAC. TDOC. Teledoc, we've gone over this one a bunch of times. I like this. Let's take the drawings off. Start fresh. What are the charts telling us? I drew these lines a while ago. And they seem to be working out fairly well. This lower band at 180.83, firm support. We're looking for a breakout above this volume shelf in particular. Here. $213.88. If we start breaking out above this resistance level, then 221.81, then 234.07, I would be adding on each close above those marks. Stokes, while declining, are flattening out. I don't want to see the Stokes break to new lower lows. We're well above the 50 mark, which is essential weekly chart. The weekly chart's looking good. Let's take the drawings off for a moment. So we had a beautiful reversal bar the week of November the 16th. We've been consolidating that reversal, holding support very, very well. Now it's just a matter of, do we begin to break out? So I don't see a compelling reason to go jumping in. Well, maybe I do, actually. Daily chart looks good. Beautiful bullish reversal bar yesterday. Let's make the call here. If we break out, if you're not net long already, if you don't have a long position already, I'd be a buyer on a breakout on a daily time frame above, where's my 4 hour? There we go. Above this resistance level. I want to see it close above it. Nibble, nibble. Because you have a lot of overhead resistance above. You want to stay disciplined, add on strength. My alert's set. Now I forget it. If it breaks down, I don't care. I don't want anything to do with it. But it looks as though it's probably going to break out. Facebook. The performance of the big Trip Q names yesterday was not good. Ugh. All right, let's I had to clean this up. Sorry about that noise, folks. Let's clear off all of these drawings. There we go. All right. So, Facebook has broken down. It's broken support. You're seeing a lot of topping action, as noted by these topping tails. If we break 264.58, Facebook's in a lot of trouble. This is a monthly chart now. Remember that. A bullish note. Stokes is still putting in higher lows but are under pressure. Weekly chart. When am I wrong? If we break out above resistance, let's go with a 4-hour candlestick. If we break out above a weekly candlestick and we close there on the week, then I might be wrong with my bearish take. We are consolidating nicely. I just don't like the cues. If you're going to buy down here, I would use a stop loss right below the lows of the week at around 265.20 on a break below that mark, especially if we close down below it. You really need to reevaluate the trade of being long. I wouldn't short it yet, though. Yesterday was an abysmal day for Facebook, and you have your Stokes down below the 50 mark. All right, so you may get a rally today, but that rally is subject to fading. One thing I cannot stand is when stochastics are rolling over, trading down below the 50 mark. It doesn't end well for longs. So whatever you do, don't go chasing an intraday rally. It doesn't matter where stock trades intraday. What matters is where it closes. And usually when these Stokes are in correction mode and moving lower, rallies fade. CGC. Let's get this, clean this up a bit. All right, so a huge breakout in November. Obviously, you had the election. I'm just digesting this chart right now. We had resistance at 29.61. Stokes is still rising, looking good. Monthly time frame, weekly chart. These topping tails are implying that we have resistance above. Stokes are flattening out on a weekly time frame, which is good. Support at 25 bucks a share. Where did we close yesterday? 26.12. There's resistance at 27.15. You start creeping out above this upper band of resistance, you can nibble on it. Daily chart. Good move up higher yesterday. Daily breakout. What would be really exciting is for it to pull back and retest the breakout point. I'm going to create an alert here. And if we come within that neighborhood of retesting, it could do so as early as today. Then I would be apt to enter a trade. So our alert is set. For me, the risk reward entry point is best found on a pullback. Take note of prior prior resistance up here. That's where we stalled out yesterday. So don't be shocked to see a pullback. That doesn't mean it's a broken stock. It just means that it's pulling back to do a retest of the breakout point. That's a healthy thing. Bonnie Bean. Good morning. All right, I'll leave off with Costco. Yeah, I'm open to it. I mean, the environment is right, especially if the Dems take all houses of government. I mean, there aren't many industries that are going to do very well, but the weed stocks are probably going to do very, very well. We'll leave off with CRSP, then I got to get going. I got to get to the gym. CRISPR Therapeutics inching up higher. Monthly chart looks good. No new weekly low. It's critical that we hold 148.22. And it's equally as critical that we break out above 160.42. Daily chart. Yeah. I wouldn't buy it here into resistance. I'd buy it on a close above resistance. Or if we get a pullback to support at around let's call it 149 per share. Now the Stokes are not looking good. They're declining. They're losing momentum. If we break this 150 mark, you need to avoid it like the plague. We closed at 158. Just be careful here. I'm not a big advocate of stocks getting long of them with these stochastics losing momentum, as CRISPR clearly is. You can't ignore the fact that we did reverse off the lows of the day, but I'm not very excited about this setup. What I could picture happening here is a head and shoulders setup. Left shoulder, head, right shoulder forming. Neckline, 148.25 to 150. So be careful here. All right, folks. Please, if you could smash that like button, I'd really appreciate it. Everybody have a profitable trading day. And, Tesla for Costco. Hold on one sec. I'm migrating my list over. I don't think I got to the T's yet. I did not. I've been very bullish on Tesla. And that is beginning to wane. This is a weekly chart of Tesla. And while we did make new all-time highs yesterday, take note of the MACD histogram. It's losing momentum, beginning to flatten out, despite the fact that we put in new all-time highs. A bit of a divergence there. Also note, RSI, lower highs, despite the fact that we're putting in all-time highs. You're welcome, Costco. Daily chart, it's extended here. You know, Tesla has put many a short to shame. So I wouldn't short Tesla shares, but I would be wary of having an overweight position. If you have profits, I would start thinking about making some of those profits real. I would not initiate a new trade, but they're not ready to get shorted yet. Volume dropped off yesterday. Remember, yesterday we're back to business, normal business hours. And volume at all-time highs is very light, and you saw some topping action. Yeah. Beware here. Intraday, lower highs. No lower lows yet. But beware. All right, folks. With that, again, have a profitable trading day. Smash that like button if you would. And members, I'll talk to you later on. Be well.